Hi, good morning everybody. This is Nicholas Teo from CMC Markets here in Singapore. Today, the 28th of August. Markets caught a bit of a bounce this morning, at least from the open, and we're seeing things a bit flattening out down here. Now, a key reason for this very strong opening was what happened last night in the US. US markets closed registering one of their biggest daily gains in quite a few years. This of course came on the back of a very strong Asian markets close last night, led by the Chinese markets on very strong rumors towards the close last night here that the Chinese authorities were seen coming into the market very actively bidding up plays. Now, the US market had also a point to cheer in a very good solid GDP read for the second quarter. As we see here on the screen, GDP numbers came in at preliminary numbers of 3.7%. This has actually beaten the forecast of 3.2% handsomely compared to a previous read of minus 0.7%. So ultimately, we are seeing engines firing up, especially in the second quarter this year. And a good reason for that was consumption. The consumption numbers came in quite strong on the back of perhaps that low price of oil. Interestingly enough, oil saw a huge rebound last night. We flagged this product yesterday in our daily, both in the YouTube and also in our daily notes, as a potential product that could bounce. Could bounce purely because it is perhaps reaching a level of a point of inflection, if you may. Now, just let me draw some lines down here. Let's pull up a 200-day moving average, and we see sort of this number, this sort of line come in. But what we did yesterday was to draw a trend line showing that there is a closing of that triangle, if you may, and this is something that we get it from here. Now, essentially, yesterday we flagged that a breakout up or down of this could set things up quite fast, and indeed we saw that once oil broke the 40 level, after edging up to above the 40 level, it sort of raised to a much higher level and is now hovering at around the 42.7, 42.8 sort of level. Now, the initial breakup was triggered, may have been triggered by the GDP numbers, but that continuation move was purely because it hit that point of inflection and you get a bigger move usually out of that. $40 was obviously a psychological level also, and shorts scrambled to cover their positions at the risk of in the fear of facing high losses down there. But anyway, now what this has done this morning is to allow stocks like Keppel Corp, for example, catching quite a bit of a rebound. It gapped up above this. This is a Fibonacci 23.6% retracement level, and we see this Keppel close here last night, and we are seeing a very nice bounce, gap up bounce down here. Now, whether this is temporary or is something that could be sustained in the longer term remains to be seen. As we have often argued, there are so many moving parts to this equation, and any part could move out of sync, which would mean a reversal of everything else. The last few days we highlighted the VIX. I would like to continue to talk about this. Now, the VIX, despite last night's strong gain in the US market, the VIX did not tank as it normally would have in terms of its inverse relationship with stock markets. In fact, it is still hovering at a very elevated level, elevated from this big rush that it had from earlier the week or early the last 2 weeks of sell-off in the stock markets down there. So clearly, you are seeing people perhaps buy a little bit of insurance. At least that's what this picture is telling us. This insurance that perhaps this whole rebound is just a temporary rebound, which could possibly offer market players and traders an opportunity to sell into, a strength that they could sell into. It remains to be seen. There are again quite a few things that could be happening that could motivate these moves, but mind you, the trading has been extremely erratic and choppy, and very much last hour kind of motivated, and which suggests that there's all kinds of different kind of MOC, like market on close orders or margin trading orders, or rather margin for selling orders, that is actually a technicality that could swing things either up or down. we're going into a weekend. Friday is a day where traders generally like to actually close up positions and not hold anything over any potential surprises that the weekend could bring or may bring, and it's a bit confusing to see what sort of positions they've had accumulated through the week in view of the volatility that we've had. But anyway, that's all I have. Thank you very much, and good weekend ahead.